Hey guys, hello, and you've joined us live here on Moneycontrol, and I want to talk about the energy prices where we have seen divergent cues, by the way, when you look at across sector here. I'll start with the natural gas prices because we have seen declines here just about continue. We're trading at a 25-month lows right now, and when you look at the current year, we're down by more than 35% already. To begin with, there's a decline in LNG export from US, and the US production itself is trading at around 2 week highs at 97.9 billion cubic feet per day here. So we are looking at higher US inventories and lesser exports, and that's weighing onto the prices. In Europe as well, the winter hasn't been as harsh, and there as well, if you look at the inventories, they are more than 70 to 75%. Europe actually has been able to make a lot of electricity with the wind and solar as well, and that also has led to less usage of gas there, which also has led to prices down. And going forward as well, there's an expectation that until 18th of Feb, you are looking at above normal temperatures, so the gas demand is not going to be as strong. Whether or not we found bottom yet in case of natural gas is something that the jury is still out on. But take a look at the crude oil prices, and then after that very sharp decline in the previous week, where we saw the crude oil prices decline by 7%, this week has seen 6.5% of gains come back. So today is a third straight day that you are looking at the crude oil prices trading on a stronger side, and there are a few cues because of that. The supply disruption is the major reason here. You have Saudi Arabia hiking rates for the Asian consumers for the first time in 6 months. That is because the demand is picking up now. The Chinese demand estimates are on the stronger side. That has been supportive. And as I said, the supply disruptions is another part. You have shutdown in oil field in Norway. There also are suspended operations still at the Kehan in Turkey. We also have a report from BP which says that at Azerbaijan they have reported a force majeure there as well. So all of these supply concerns supportive. Markets will watch out for $88 as an immediate resistance for the crude oil prices. That is where we have seen resistance hold on for the current year in 2023. Crude actually has already made a range of 78 on the lower side to 88 on the higher side, and the markets do believe that it is going to be between 82 to 88 on the higher side of the range that you might be looking at the crude prices trading within. Most of the important economic data is already out, but what the street will watch out for is the Chinese inflation numbers that come in tomorrow, and then the rest of the data comes in the next week, especially from China, as the markets have been weighing in very strongly on the Chinese demand coming back. So for the month of Jan and Feb, all of this data which comes in the next week will tell you on whether or not the demand actually on the ground has picked up or not. So until then, there is some support that can continue in case of crude oil prices, but the crude inventories, or rather the crude product prices, is something that continues to be under pressure. So whether it's gas, heating oil, gasoline, all of that in the negative, but not crude. That one is still trading in positive.